This is London with MarketHedge. Pay attention to Bitcoin at 119,000. In terms of this specific chart, I want to make sure you have it on your trading view. Which specific asset? It's not just Bitcoin. You're going to have to add Bitcoin and then index, INDEX. Type that in to your watch list. Hit that plus button. Make sure you've got that trading view published. It's the all-time history index of Bitcoin so that you can register and lock in with this specific line of resistance that we found yesterday. I went ahead and told you guys at the end of that video yesterday, smash the like button, guys. Shout out in the comments if you're trading Bitcoin, and congrats anyone who's making money along with the trades here. In terms of this top line resistance, it was from 2021 was that one. The preceding it around that 68,000. This specific hit about 20,000. So it's this macro continuum triple hit that we finally got. Why do I say finally? It's been a target for the bulls because we didn't hit it here at the 110. Why is that significant? Because on the lines, as opposed to the specific candle wicks, we already satisfied the target. So looking at this specific line chart on the weekly, okay, go to your weekly time frame, you're going to see that this is an area of first instance technically here on the candle wick. So we identified this yesterday. If you're in a short, congratulations in terms of that top line in around that 120, 122 has paid. Now let's go through the details in terms of some additional parameters technically for you to look at. Let's review the bull flag. Let's go over if you didn't catch this move up. And just an update on the trades you guys have been following, okay? 178,000. I got to tell you, this is some major risky business here. 50,000 on this trade, 52K P&L, this is 178K. Yesterday this was 220, okay, up to 220. So if you're not used to or accustomed to or able to tolerate huge swings in terms of profitability, then guys, leverage trading is definitely not for you. And if it's not permitted in your country, etc., then it's certainly not for you. So we're going to go through the details here, and I do have another specific line of resistance, top line at 110,000. I want you guys to zero in on as a potential return complication for the bulls. We're going to go over this and cover this in just one moment. First of all, I want to cover. Let's go through the good news. If you didn't get in thus far, if you don't have a position, if you've been watching other people trade, or if you just looked at people trading and you said, I just don't want to trade myself, right? I want to go through the low to the high here of this specific interval, kind of an intermediary interval with some Fibonacci retracements. This is the chart from MarketHedge.pro, which you can go and access by hitting trading. Looking at that low to high from the 76,000 to the 120,000, you're looking at a first primary entry in terms of an acquisition level at just under 110,000. Okay, so that first 23.6% retracement is a big level to regard. Okay, so jumping in high is never really the solution in terms of going along. We always want to capture value. All right, so looking at that 38.2, 103,000, right about that 103,000 is another primary level of interest right now where orders are stacked. It's a bottom line. Now, if you want to carry that specific rationale forward and you want to say, fine, where are we really looking at, let's say beyond that, if we could get a 50% retracement. And I always tell people this about Bitcoin. If you get a 25% discount, invest. If you get a 50% discount, invest a lot more. And if you can get a 75% discount, right, invest a whole lot more. So looking at, let's say, a standard 25%, that would be around that $100,000 level. That's a good time to invest, right? The 50%, right, invest a whole lot more. If we could get down to a 75%, guys, in terms of this intermediary run here from about that 15,000, this would represent the trend. We'd be looking at, guys, a pullback, which is not realistic now, but that 44,000. If and when to the extent it gets there, everyone gets afraid to invest. What we're looking at right now is an interesting complication as we look at that level of resistance up across the top. As we look at this specific formation, we're kind of screaming into a potential breakout of a rising wedge. It would be phenomenal, really phenomenal, for us to get up and over this pattern and to be able to attempt to re-hit it with just a monster short back in this level. Guys, if you long, if you short, whatever you're into, just respect the technical feature that's going on. And typically Typically, this would break where? To the downside. A lot of momentum can push it up over the top, and we would expect a breakdown thereafter. Very important on the weekly time frame that we regard that for Bitcoin. Now, let's go through something that we covered a little bit later last week, which was this bull flag. Typically on the bull flag, what are the technical requirements? Let's go through this. It's a move to the upside. Then we want a specific downward sloping channel. It needs to cut against the trend, right? So the trend is to the upside. The channel cuts against the trend, meaning the channel slopes down. The technical expectation here would be a repeat of the move to the upside. They say the flags fly at half mast, right? So repeat to the upside, stacked along a level of support. We're looking at 135,000. About 135 is a technical target to the upside, right? What do we have to the downside? If we're just looking up, we're going to miss half the picture. So do we have anything to the downside to complicate the story? Well, we do. If we look at the breakout of that bull flag, we also see that there's an accompanying flat top resistance. Now, there's maybe a 1 in 4 chance, let's say a 1 in 4 chance, maybe a 1 in 5 chance we leave this behind. Bam, we're gone. We're up and out, and we're gone. But technically speaking, as we look back over all the probabilities and all of these specific patterns, this would be an ascending triangle that we're looking at. Abridged, let's say cut short, didn't fulfill all the way through the full pattern framework, but definitely implied with level of support, resistance, support, up and out. So we've got about let's just say we've got a slim chance of just leaving this behind altogether, okay? The greater probability typically is going to be revisiting this level of resistance, this flat top resistance, where sellers were parked. Right? You guys have done well. You're long. You're making money. Sellers have been parked here, guys. They were parked here and got paid at that 110 very nicely. Parked again, got paid at the 110 again. They tried to reinforce this a third time, and they may still be holding those short bags. So to the extent that the greater probability would be, and I mean like up to, guys, 75+% of the time, the market's going to provide some sort of a break even. Okay, some sort of a break-even opportunity for these short holders. It's just do your own back testing. So again, about that 1 in 5 chance, we don't revisit it and we just take off. Before we get to that specific level, though, I want to use this specific feature. Let's look at this. I want to use this specific feature. Let me go ahead and take this out if I can. Let's see there. Yes, remove them. I want to look at this specific line of resistance across the top as a level for the bulls to reinforce, okay, on this broadening formation. Yes, we have the flag. We also have this broadening formation we talked about. Today we're talking about with a return potential, right, and some statistics that matter, right, a potential return to that 110, right? So as you look at the complications between the multitude of patterns, the challenge is which one is relevant right now and to what degree, right? If you're at a poker table, you know your odds, right? You know when it comes down to it and it's time to place your bet, you know, right, when the time is let's say when your 100% chance is your 100% chance and it's time to go all in, or if you've got a 0% chance. So when it comes down to your exposure and the probabilities, the levels of relevancy of all of the confluent patterns, meaning they're happening at the same time, we look to which one is engaged, which one has already fulfilled its target, which one is now, let's say, irrelevant, and which one poses the most immediate the most immediate relevancy here. What I would say is that on the specific line of support, level of resistance, this broadening pattern, what I would say is the following, and let's note this very importantly, technically, very, very important technically. Let's take a look at one thing that is not on the standard radar but should be right now. Let's take a look at NVIDIA. Now, I don't always cover stocks. You guys know that. They're around, but NVIDIA is the market leader for the NASDAQ. You agree? Taking a look at the pattern framework in NVIDIA, I looked at this yesterday. I said, well, lo and behold, somewhat interesting. As we're looking at Bitcoin being in a broadening formation here on this lower time frame, looking at NVIDIA is in a specific broadening formation on the macro. That is a big, big broadening formation. So NVIDIA is yet to test up and over that line of resistance, they could be a nightmare or they could be a beautiful surprise for the bulls, period. Can be very difficult to muscle up and out of these. A lot of momentum is required typically. But as we look at any confluence technically between Bitcoin and the market leader NVIDIA, we see that yes, there is a technical overlay. There is a technical congruence that is undeniable. So I'm paying very much attention to that with the understanding that yes, Bitcoin's actually up and out of, and it's going to be a smaller time frame. We're on the daily here, but on that weekly, it's going to be close, guys. Let's go to the daily here. The daily still is going to clearly show it. Note that Bitcoin is up and out. Note that Bitcoin has outperformed. We like the story, right? We like the story. So in terms of that, just notice the congruence. I want you guys to research, if you can, the specific broadening top formation. Tell me what you know about it. It's something that, again, it can be a nightmare or a beautiful surprise if we can muscle up and out of this. But immediate relevancy is what? The immediate relevancy is that this line of resistance across the top is what? It's immediately relevant to the extent that the bulls have a framework for what? Well, the bulls have a framework for reinforcing this move to the upside, the pattern break, which again, NVIDIA didn't have. We have this opportunity to complete this pattern framework with, you got it, with the target of, let's say the target of the specific amplitude carried up of the broadening formation, a very aggressive upside target looking at $156,000. We have that opportunity to trade this pattern. What? I'm going to say why is that immediately relevant? Because it would mitigate and it would nullify the return to the 110. Okay, if bulls, and to the extent, this is how you can say, well, is this pattern relevant? Where is it stacked in order of relevance? This is immediately relevant to the extent that bulls, if they can maintain this specific pattern in play, which again, we see referenced, and in terms of the legitimacy of the pattern, the market leader, NVIDIA, is also showing that same pattern. If the bulls on Bitcoin can maintain up and over the line of resistance, and let's just call this that 117, 118, then we are going to participate in that let's say that 1 in 5 chance where we just completely leave this $110,000 flat top resistance behind. Understand how immediately relevant this line becomes and how you can rank your patterns, how you can, let's say, just order them to make some sense around the level of immediate relevancy and urgency that they mean to your trade. So looking through, this is going to be the line to hold, that top line resistance on that specific framework. Now, without getting into too much more granular and detail, because I know it's a lot to process, let's just say flag poles repeat. We got that? We got it, right? They fly at half mast. We have a higher target, right? The difficult pattern we're dealing with along therewith is what? We have a broadening formation, a broadening top. Do bulls typically love those? We certainly don't hunt them down to trade them. Okay, we just don't hunt them down to trade them. With that said, we're showing a confluence with a technical market leader on the stocks, on the equity side of the equation. Okay, Bitcoin is outperforming, and Bitcoin is also carrying up and over one of the best looking bull flags we have seen in the history of Bitcoin. So we have a little bit of hot, a little bit of cold. What I'm going to say is I'm back into the MACD. Take a look at your MACD as you see this starting to sort of tire out. When you see that change in gradient, that is moving average convergence divergence that's starting to tire out a bit. You can see it tiring out here, tiring out here. We're concerned on the daily, weekly, or monthly when what? When we go red. Okay? Mind the MACD if and to the extent on that daily, we're still green. On the weekly, we're still green. On the monthly, we're still green. Okay, so if you're on lower time frames, all of this adjusts. It becomes a lot quicker. But to the extent that you're looking for some sort of a threshold, some sort of a litmus test, and all of this doesn't come naturally, I'm going to remind you, plug into the New York Institute of Finance. Okay, plug into John J. Murphy. Plug into Tom Bolkowski. Shout out to Tom, good friend of mine. Okay, plug into the guys who make the difference in terms of technical analysis of the financial markets. John J. Murphy, published by the New York Institute of Finance. Right? What is the New York Institute of Finance? That's where real Wall Street traders go to school. Okay? That's not anything on YouTube. That's where real Wall Street traders go to school, the New York Institute of Finance. You can take a course there today, guys. Get one of their TA courses. Do it online. It's $200-300. And don't listen to the riffraff in and around. Pay attention to the guys that matter, like New York Institute of Finance. Bulkowski's book, Encyclopedia of Chart Patterns. This is going to mean something completely different to you if you have read through and mastered the work of Tom Bulkowski and of John J. Murphy. You've got all your questions answered, right? If you're still fishing if you're still fishing for the answer, I'm going to give you the books to where you can learn to fish. Okay, so it's the Murphy, it's the Tom Bulkowski, Technical Analysis, Financial Markets, and Encyclopedia of Chart Patterns. This is London with MarketHedge Pro. This is the line. You guys got it, that broadening formation. Appreciate the confluence with NVIDIA. Appreciate the fact that we have outperformed NVIDIA right now. Relatively speaking, we're up and out. NVIDIA's had a nice run too, guys. Really nice run. Let's go get them. We got a good rest of the weekend coming. A lot of exciting things coming as we look at MarketHedge. One thing I will remind you as we get in here towards the end of the video, and in terms of the link, I'm trying to present information which is relevant to you. That's it. If I could sit down with you for 5 or 10 or 15 minutes, it's what I would exactly tell you, guys, if we were sitting down in a closed quarters here. Taking a look at this low to high, if you've missed all of the action in Bitcoin, take your tool out, your Fibonacci retracement, draw your specific low, click 1 to your click high, and take a look at that 23.6 around 110. It's a target. Take a look at that 103. The 38.2, it's your second target. Take a look at these levels of exposure, right, that will help you gain some value and set some alerts, all right? Don't FOMO in. Do not chase a runaway train. Guys, you will fall flat on the tracks most of the times. If it's left the building, let it go and have some patience. Wait for another pickup. If we were to look up, let's say for another pickup on the 4-hourly, low RSI, let's wait. If you don't have a position and you got to go long, why don't you wait and see if we can hit that 111? Right now, that would be on the 4-hourly time frame. That 4-hourly time frame, that would be right, a nice time to pick up. That's about the price estimate right now. It's going to be $111,000 for a 4-hourly low, oversold, where the bears have pulled in, and it's time for the bulls to get running again. So, congratulations to all those who are trading. This is London with MarketHedge Pro. Hope this has been beneficial. We'll have some more time to hang out directly in chat rooms as MarketHedge.pro is coming together, technically speaking, and we'll have that within the next, I want to say, week. We'll be up and running on our own platform. Excited about that. Guys, have a blessed, great week, and I'll come at you with some more technicals. Until then, stay safe, be good, and let's rock and roll Bitcoin up and over that 118. That's our line in the sand, 117. Let's go. This is London with MarketHedge Pro.